Good morning, good evening, good whatever time it is you are listening to this. I hope you are having a good one. I'm going to be going over the week of April 7th, and I'll be going over the data sets, the earnings, and my expectations for the S&P, aka SPY. So with that said, let's go ahead and jump straight into the data sets, and whoosh, there we go. Okay. Alright, data sets. So tomorrow, Monday, we have a revision for the consumer credit for February. We're expecting the forecast at least is expecting a downturn, so I don't know what the market's going to do with that. That should reduce the yields, which generally helps the market, but seeing how we're in a full-blown correction slash sell-off slash crash, we will see what that does. So very likely it's not going to do a whole lot. Just be aware that it is a revision. Now, Tuesday, again, not a whole lot going on. We do have the 3-year Treasury auction. Most aren't going to be paying attention to that. I will. I assume the yields are going to be pulling downward on that. We have member Daly speaking later in the day. I don't usually track what Daly speak or what he says, but I will be keeping my ears open just because every single bit of news right now is kind of important when the market's kind of free falling. Now, Wednesday is somewhat of an important day, but not really. Uh, we have the 10-year Treasury auction, which that's probably one of the most important auctions of, all the Treasury auctions. The 10-year is basically between the super long term and the shorter term stuff. So that's the notes that lots of hedge funds load up on, countries load up on. This is probably one of the largest liquidity notes available. So it's always nice to see the 10-year auctions. Now, generally, uh, the yields have been pulling down. I'm not expecting any change with that. The yield should continue to pull down. Now, what makes Wednesday interesting is we have the FOMC meeting minutes. So generally, I don't care about the meeting minutes. However, this last FOMC, if you've watched some of my previous videos or have read some of my content, I am. This last FOMC was extremely important. Powell went into a lot of really important details, and I think being able to kind of get a sneak peek at what each of the central bank heads were thinking about during that meeting is kind of a big deal because this was essentially the meeting that triggered, the crash after, the tariffs. Tariffs. I get heat for it no matter which way I say it, so I'm just gonna continue saying it both ways. Now, Thursday, I personally think Thursday is gonna be the largest day this week, but it's kind of tied between Friday. Thursday, we have the weekly jobless claims. As always, that's an important data set, but one I'm not, feverishly tracking right now, but I'm going to start to track that again because the labor market has come into question of um, are the layoffs going to start? Is hiring still going to be continue or considered tightening? And is this going to be a recession indicator essentially? Uh, so we will keep our eyes on the jobless claims. If we see a very large spike in those, then that's kind of a warning flag. But for now, we'll just take it as it is and see where we go. Now we have the CPI, which based on all the other prior data sets for the last month and a half, we should really have expectations that the CPI is going to be coming in lower. Same with the PPI on Friday. That should just kind of be what's anticipated right now. I'd be extremely surprised to see the CPI come in higher or even meet the old level, like the previous levels. Uh, yeah, I would be extremely surprised. Um, with that said, the CPI and PPI should be coming in lower, which again should help reduce the yields and should be a good thing for the market. But seeing how the market is in free fall right now, it's again kind of hard to determine. Now, we also have a few Fed speakers on Thursday. So we have Bowman speaking at 10 a.m. he can kind of say some important things. Same with Harker. I usually don't track Harker. He speaks at 12:30 p.m. Uh, he can say some important stuff, so just be aware we should be listening to a lot more of the Fed members right now while there's so much uncertainty in the market and just within yields and treasuries. Now, we have the 30-year bond auction on Thursday as well. That's a pretty important one for a lot of reasons most people don't look at, but I'm looking for that to continue pulling downward. Um, I don't see why that wouldn't, unless we see some crazy high print from the CPI or something to uh, scare off the buyers and the sellers for the bonds, essentially. Now, Friday, again, we have the PPI. As I stated, I do expect that to come in lower. The market has a forecast for it to be higher. Now, I don't know why that is. It might just be because the March PPI was just, tanked into the floor. Uh, that could be a good reason. This could still be a low print in regards to that. So, um, we'll just be aware of what happens with the market when those data sets drop. We want to see this coming in pretty much right on the forecast or below. Because any print right now is that's a positive print's going to be a higher print than what previously was. Now we have a lot of like Michigan inflation, consumer data, blah blah blah. That comes out at 10 a.m. I usually don't pay attention to it too much. It can sway the market. Usually it doesn't, but it can. The one that I am looking at is the consumer sentiment though. Um, that's kind of one of the big narrative points right now is are consumers failing? And I believe they are. I believe the market and the data is telling us they are. So, Friday we end the day with a member Williams speaking. Now we do have some other data sets, but those are just they're accounting for speculative positions. I don't care about that one bit. So, um, not a real busy week, but Thursday and Friday are a little packed with data. So just again, let's be aware of that. Now, there really isn't any big earnings this week, and hold on, my camera's going to shift for a second. There we go. All right, as you can see, there's literally nothing. There's some bank earnings on Friday, but we we really don't care about that right now. If we see a major bank failing, then if you look at CRE, which is just the symbol KRE, you can see that, and that tracks the regional banks. But if even if one of the main banks um, misses the earnings or something, then all those regional banks take a hit as well. So I'm really not seeing anything special out of the earnings this week. Pretty bland week, but I do know that the next few weeks, the big tech earnings are starting to pop back up again, which we will be talking about in our thesis in a little bit because that is going to um, play into it a little. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting right into the technical analysis, as always, let's go to the daily chart. Let's open the Bollingers and the moving averages, and we are going to be far below everything, but it's still good to discuss the levels, so we will be going over them very quickly. Now, we closed Friday at 505.28. Currently, the overnight did gap down. It hit 487 at one point. Um, it could have been lower than that. Hold on, let me see. It actually hit the 482.60. Okay, so pretty major gap down overnight. Now, since we did close on 505.28 on Friday, we have the 5 mile currently at 545.37. So with the close at 505, that's probably going to pull the 5 mile down. Geez, probably to the 527-ish, give or take. Maybe even lower than that. Just make sure you mark it Monday morning when the market opens, mark where the 5 mile, and that's the 5-day moving average. That's the green one right here. That's a very important level to mark down. So Monday morning, just make sure you write that somewhere that um, we can keep track of that. Now the 10 mile is currently pretty far above us. It's at 556.77. The 20 mile is at 558.35, so those two are pretty consolidated together. The 200 mile is at 571.04, so it's still all the way up here. Pretty far away from us. It's still full $70 away from us, which is, a little absurd to think, but is what it is. Now we have the lower Bollinger currently at 528.95. Now that's going to continue pulling down as the market catches up back to the 5 mile. So we should expect that to continue pulling down pretty close to the 510 area, give or take. It depends if we continue moving downward today or not, or, Monday. Now, the ADL, and I'm not covering the upper Bollinger right now. We're so far away from that, not worth discussing. But the ADL, and again, this is the money inflow and outflow. This is massive, 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 massive outflows. This is entirely wiping. Hold on, I'm just looking at the date really quick. So it looks like almost pretty much all the money from the new year, starting January 14th onward, has been entirely wiped out from the sell-off so far. And that's not just going over market price, it's going actual like money volume. The ADLs is the accumulation distribution line, if I remember the term correctly. Now, it's essentially like a bank account. So if it's moving down, your money is leaving. If it's moving up, then money is being put in. So we are seeing money leaving at a rate, since essentially the beginning of the year. So everything that has happened so far this year has been entirely wiped out. Now, getting rid of the moving averages and the Bollingers, there was a few gaps that I talked about, and we kind of blew through these gaps pretty fast. There was this 536 gap, which is currently showing at the 534, and that's because of the dividend that happened, a few weeks ago, or during the last OPEX. But that's why that's why kind of everything's down the whole like $1.70 whatever it was, because the Webull charts adjusted. So and the dividends generally come from the price anyway. So with that said, we had a couple important gaps here, and I want to open up the drawing tool really quick. Everything's going to look pretty gross for a moment, but bear with me. I want to put another horizontal ray. I want this to be orange. And we're going to put this right at this gap down here that we're going to discuss. Sorry, we're kind of going over this in real time instead of me having it set up well in advance. So these two boxes right here, I'm going to shrink them. They're really important liquidity zones, but I do want to keep track of them for later. So we will just shrink those down. This selling channel, we do need to expand because it has really opened up much further. So let's go ahead and expand this. Now we're targeting, let's see, we're at the 580. Roughly something like that right now. Okay, because we want to target the structure that created this monstrosity essentially, and that's this inverse cup right here. So that's the bottom, and it's not exact. It's kind of hard to adjust it on the computer chart compared to the phone. But very likely that's going to be this selling channel. Might need to pull this down slightly more. to about there because that's where that gap is from the overnight. So anyway, we have three really important gaps, which are um, the 536, the 507, and then there was the 587, which I kept saying 583, but it's 587. Now, we blew through the first gap. Um, for now, we just kind of need to ignore that, but I am going to keep this on the chart because it's still a really key level. As you can tell, they were actually testing this level for support before they decided to break through it. And then they tested the second area for support, and now they're breaking through that. So now we have to look at this previous support. And again, when we're going through a sell-off like this, that's kind of how you have to trade it. You just have to continue look for historical supports that were, strong. Um, these supports, and I want to get the drawing tool out. These supports were strong. That was a strong support. That was a strong support. We have plenty of strong supports in there. We have a strong support right there. And we have a strong support down here. Okay, I don't think we're going down there yet. Now I'm going to delete this line. That line doesn't matter. But, that is a potential. And just to kind of draw out how huge of a move that would be. And just to be clear, we're around 22% off the top right now from the SPY, which was technically 613, but with the dividend, it's at 611 something. Um, we're already 22% down from the top, and that's with this overnight gap right now. So if we were to go down this far, that'd probably be one of the largest sell-offs in history. Yeah, that'd be pretty nuts. I don't really expect that. Um, I do expect something like this, where we do have this really nice inverse cup formed, and this is pulled out a little farther. Um, that handle should be a little closer. I'm not going to redraw the cup though. You guys get the point? Guys and gals anyway. You understand the point. We have this large cup, this inverse cup that formed, and it hit the bottom. Now that we hit the bottom, and I'm just going to pull this over a little bit if it lets me. Nope, it won't. Okay. We're going to redraw it. I said I wouldn't, but here we go. Being brave tonight. Okay. Redrew that. I'm going to delete this liquidity. But just keep in mind, those gaps are super important. This gap's really important too. This was essentially the first major support since the rally in November. Pretty massive. That's a really important area. So what we're looking for here is for a bullish structure to form. Okay, and I'm just going to draw a box here because I want to look at this on the hourly time frame. Now going to the hourly time frame, and this is going to look wonky. Let's go to the 4-hour. It might look a little better. Okay, so looking at the 4-hour, and you can see that gap. It hit the 482.60. So what we're looking for in this area now, and I wish this square came out just a little better, but it's not. What we're looking for in this area is some form of bullish structure, and a bullish structure would suggest we're forming support here. So we're looking for, potentially an inverse head and shoulders to form on this channel. And already I'm seeing I'm gonna have to bring this channel down a little bit. So it's already expected that we're gonna be pulling and trading into this 583 area. I know this inverse head that I drew looks like it's going to 5 or 470. It's probably going to be smaller than that. But we're looking for some sort of structure, and it might be a cup too. We have plenty of areas to build a cup, so it could build on the bottom of that support. It can build from the top of the previous support, from the bottom of the support we're at right now, and build from there. But essentially you just need to be patient and wait for some form of support to build here. There's no real reason to chase this upward. So I know a lot of people, including myself, are bullish, trying to catch the support on this thing. We just need to wait, and it will show itself. It will create some form of structure where it says, okay, we're going to slow down the selling, we're going to start buying. And then you'll see the buying pick up, you'll see the ADL pick up, on some of these lower time frames, and it'll be a very clear signal. There's no reason to rush into this, especially with the data sets we have this week. We really don't have much data until Thursday, Friday. So again, there's no reason to rush into calls here, and there's really no reason to like try to chase puts too much. Um, if we get a pop upward and you can tell that we're going to continue rejecting downward, sure, scalp some puts. If you're seeing some support heading upward, scalp some calls, but I'm saying don't go crazy on loading lower duration calls expecting some massive buy upward. You just have to be patient. Now, what I am suggesting to many people and what I will be doing myself is I will be taking a lot of tech and semiconductor leaps for January 2026, and they're very cheap right now. I was looking at like the Soxel calls for the 20 strike for January 2026, and they're only like mine are currently at $117 right now. But assuming on open we're going to see the large gap down, I'm assuming those are probably going to be around 90 something dollars each, which that's kind of a bargain. You know, not trying to sell Soxel here or anything, but look at this sucker on the daily. It's currently at $7 right now, and it was sitting at 30 plus dollars for an extremely long time. It hit all the way almost to 70. So I definitely want into that. I'm probably going to try to buy another 4,000 shares. I have 5,000 right now. I said I originally only wanted another 2,000, but with this gap down, I'm really thinking I kind of want to just pull the plug and take those extra 4,000. I will be adding more leaps as well with this leg down. Again, that's kind of how we just have to play the SPY right now, and um just how we have to trade in general right now. If you're not going to be scalping, then there's really not room to swing because the volatility is just too up and down, up and down. You're gonna be risking a lot more than what you're gonna be catching in terms of wins unless you play straddles or some sort of strangles where you're essentially playing both sides. Now, I like those a lot. I've been suggesting those every time we've hit support, and every time we've done those, they've paid out like immensely. So I suggest continue doing those. Especially on these big moves up and down. Like these straddles pay themselves out nonstop. Very good trades to do. But we're looking for support in this area. That's kind of the big play right now. And when we do find the support, we have a lot of room upward. We have this whole selling channel upward. And while it could take months to build back up to that point, that's still, huge room. This is the time where you could buy leaps for, a few $100 or less, and they turn into, 1,000, 2,000 plus dollar contracts, if not more. This is a very rare buying opportunity, and I highly, 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 uh, I'll never make any financial suggestions, but I will be doing it myself. I will be taking leaps, uh, trying to buy the dip. Every time we leg down, I will just continue adding to those positions and adding shares on top of that. That's the way to trade this. And for the short term, I'm just going to be playing SPAXU, which is SPXU. It's a super, super good symbol. Has a ton of movement, and I'll just continue scalping calls on those for the downside until we start to see some real support, and then we can swap things up a little bit. Anyway, that's enough with this video. I think I've kind of rambled a lot. You can tell where I'm looking at. We're looking at support in this area, and if we do see some crazy breakdown, then we'll look towards the next support, which there is a support in here too. Um, we won't ignore that, but you know, there's a lot of room down. Uh, if they do want to break out of this area. If they don't break out of this area though, then they can sit here and consolidate, which means chop essentially, just keep a tight channel and pull all the moving averages uh, back into line with each other essentially. Pull the Bollingers back to where everywhere's or back to where we're trading right now. Pull these moving averages down to where we're trading. Now, what we're really looking for the bullish thesis is the 5 mile test. Again, the 5 mile is really far away from us right now. So it's expected to be opening around the 527, give or take. So it's essentially a whole $30 above us right now. So plenty of room. That's kind of the short-term target of what I'm looking for to catch support, but we will see that be pulling downward each day as we continue to hold a low price. We won't be catching that support until we actually start seeing buying, and then we will uh, catch up to where the 5 mile is. Anyway, I hope everyone has a good week. Trade safe. Don't try to go crazy with any FOMO or anything. There's no reason to load the boat and assume some massive buy up. Just take some leaps. They'll pay off, very, very well when the time's right. No reason to rush any of this, and you know, let's play it smart. With that said, have a good week, everyone. Trade safe. Have a good night. Have a good day, and I will talk to you tomorrow.